Hello, and welcome back to another episode of the Financial Freedom Show. In today's episode, we're going to look at my portfolio performance over the past week, as well as look at the other JP Morgan covered call equity premium ETF, known as JEPQ or JEPQ. Without further ado, let's get into today's video. So over the past week, my portfolio has continued to increase in value. I have deposited about 1,500 into SCHD. As you can see here, my SCHD position has increased. I am going to keep adding to that until it is close, if not matching, my JEPI holdings, and then I'll make a decision on what to do from there. I might add more to JEPI if the market continues to trade around this range. If it goes down more, I might add more to SCHD. That way I can get a better yield on cost over the long run. As you can see, my market gain so far has increased to over $2,198. I am up overall in this portfolio $3,015. And my total current value has increased to $35,523. My dividends are the same. The next payout is in, I believe, 2 weeks from now for JEPI. And then SCHD is more in the middle of the month. That should be about 4 weeks from now. I am set to receive, I believe, about $250 from JEPI and $119 from SCHD in dividends next month. So my overall dividends next month should be over $300, hopefully. That would be really helpful to get my portfolio over the $1,000 mark in earned dividends, which is really exciting. And I look forward to seeing how this performs. So far, so good. We are still increasing our overall value in this portfolio, and we are currently outperforming the S&P 500. As of today, the S&P is currently down 0.38%, and SCHD is up 0.25%, which is really nice to see that it is holding its value over the short term here. Hopefully it continues to hold its value in the long term compared to the S&P 500 in general. And I will continue to increase my dividend payments every month. My goal is to get to, in the short term here, about $5,000 of annual dividends. Right now I'm sitting at $2,700 in annual dividends. Hopefully I can reach that goal by the end of this year. If not early next year. Continuing on, we're going to talk about JEPQ, or JEPQ, as some people call it. This is another equity premium ETF owned by JP Morgan. And basically, it's almost the same as JEPI, except it is in the NASDAQ 100 as opposed to JEPI being in the S&P 500. So if we go to the JP Morgan Asset Management website, we can look at the description of JEPQ. Basically, it is designed to provide current income while maintaining prospects for capital appreciation. It generates income through a combination of selling options and investing in U.S. large cap growth stocks, seeking to deliver a monthly income stream from associated option premiums and stock dividends. It seeks to deliver a significant portion of the returns associated with the NASDAQ 100 index with less volatility, and it constructs a long equity portfolio through a proprietary data science-driven investment approach designed to drive portfolio allocations while maximizing risk-adjusted expectation returns. So, basically, they have their underlying equity portfolio, which it says here, applied data science processes utilizing 40 plus years of JP Morgan proprietary data to create a fundamental framework for security selection and portfolio construction. And then in addition, they have options overlay, which is once a month out of the money call options designed to generate income and give investors a portion of the upside with reduced volatility. And that creates JEPQ, which is a well-represented, fundamentally driven NASDAQ 100 strategy that seeks to provide clients with monthly distributable income via option premiums and dividends. JEPQ's role in a portfolio: number one, it's helpful for income addition. As we said before, it seeks to provide income through monthly dividends and option premiums. Number two, it's a diversified equity solution for investors wanting exposure to lower risk. And three, it's a credit replacement utilized for balancing income with prospects for capital appreciation. So the fund was created, as you can see, it was created May 3rd, 2022, and it is comprised of the NASDAQ 100. We'll take a look at the performance and fees. Currently, this ETF sits at $43.54, and the 30-day dividend yield is 19%. That is just crazy. The performance since inception is down 9.9%, but it has only had a couple months of performance data. So keep that in mind before investing in this. Let's look at the current holdings of JEPQ. Right now, JEPQ holds 84 stocks, and the turnover ratio is 12.25%. Their largest holding is Apple at 10.51% of their portfolio, followed by Microsoft at 8.54%, Google at 6.01%. Then we have Amazon at 4.5%, Tesla at 2.37%, Nvidia at 2.2%. If we look at their sector exposure, they have 11.7% in communication services, 11.6% in consumer discretionary, 5.6% in consumer staples, 2.6% in financials, 6.6% in healthcare, 3.6% in industrials, and 40.5% in information technology, 0.7% in N/A, and 16.8% in other, 0.4% in real estate, and 1.7% in utilities. Taking a quick look at their dividend history, their dividend is paid monthly, just like JEPI, and it is a large dividend. It is, like I said, over the trailing month, over a 19% dividend yield. But that's probably mainly because the market has been trading sideways recently. So that's usually when these portfolios perform the best, is because they're selling covered calls. I personally am not including JEPQ in my portfolio, as it doesn't really have enough history for me yet overall. But it does so far look very promising compared to JEPI. It looks very similar. Like I said, it's basically the same thing, just with the NASDAQ 100 instead of the S&P 500. And its top holdings are quite a bit more of their portfolio, such as Apple at 10% of the portfolio. So it is less diversified than JEPI, which is also probably one of the reasons why the dividend yield is higher. So yeah, that concludes today's video. If you enjoyed the video, please be sure to comment down below what you are buying. I love to see comments, and thank you for all the support over the past month. This channel has definitely grown in size, and I really appreciate every single one of you. I couldn't do this without you. So thank you, and I'll see you in the next video.